fact, we have, the management with us. The company's Q2 earnings came in well below street estimates. The revenues declined by over 2%. Margins have also disappointed. Reema caught up with Mohit Joshi, the Managing Director and CEO-Designate, and Rohit Anand, who's the Chief Financial Officer at Tech Mahindra, to discuss the company's Q2 performance. Began by asking about the drop in revenues and if the management expects the negative growth to continue in the coming quarters. Listen in.
I think from a quarter perspective, we've seen a decline of 2.4%. 1% I would attribute close to 1% to the discretionary spends that we're seeing cut, and more towards the communication side than anywhere else, because overall the global industry dynamics are still not recovered. So that's causing a big drag. Outside of that, we see exceptional items both on revenue and cost, which is causing an impact for us. From a revenue perspective, we decided as we move into a long-term strategy for the company, to clearly define what our core is going to be and what are the areas we don't want to focus on, and some of the impacts on not driving focus on those territories and business and service line, and pulling out of that and ending some of the tough contractual positions from a long-term perspective has caused this impact for the quarter. So that on revenue side, you can assume that to be close to 1.4%, and on the margin side, it's around 260 basis point, where we have a one-time exceptional item. I think as I articulated, I think we'll continue to do that exercise towards Q3, post which we think we get into a normalized, at least a good view of the portfolio. And as we articulate our long-term strategy towards April, we'll talk about what our focus on the core is going to be.
Okay, so because you're focusing on your core, you've closed certain contracts, you're not focusing on it. It's impacted your top line by 140 basis points and your margins by 260 basis points.
Right.
Can you quantify what the total contract value would be of the business that you're no longer prioritizing? Your quarterly revenue run rate is about $15 million roughly. So what percentage of that business you're no longer interested in?
In terms of the current quarter impact, you can...
No, I meant the overall size, right? Because this is going to run into next quarter. So
yeah,
is it $200 million in overall size that you want to exit, or more than that?
So it's difficult to say the Q3 numbers right now, because we're in the process, because there's a lot of dependencies. We have to work with our customers, we have to go through the details, and we have to look at those contracts. So I think while it's difficult to say what that number is going to be, all I can tell you that we will continue to drive that action so that we get towards a normalized view as we move forward, versus having an exceptional item continue. So hence Q3 will be our window that we've kept for ourselves too, because it's a lot of detailing work that's going through the portfolio and the contracting and understanding all the nuances around it. So while I can't quantify a number, all I can tell you is that it's a part of a very detailed exercise where we'll make sure that it falls into a long-term risk and reward ratio that we want to drive for the company.
So these are low-margin products?
I mean, it's a mix of tough, it's a mix of tough returns, both from a cash as well as margins perspective, as well as tough contractual contracts where the risk is always higher versus the rewards that you want to get out of it. It's a mix of all.
Mohit, it's a tall ask for you, right? Operating margins at 4.7%. Even if you take into account the one-offs, it's still single-digit margins for Tech Mahindra. What is your game plan to improve it just in the near term? Because that's seen as a low-hanging fruit.
Sure. So, like I mentioned to you earlier, it's still very early for me to give detailed, quantifiable numbers about what can be accomplished in Q3 and Q4. And keep in mind, like I said, that I only take over from CP on the 20th of December. So we're still slightly over midway through the process of the transition. Having said that, as you've seen, we've already taken a few concrete steps, right, to streamline the organization and to optimize for the future. The one thing that we have done is put together a new organization structure with a consolidated delivery organization, with a very clear sort of division into 6 go-to-market SBUs. We've hired some critical folks, including our Chief Operating Officer, and so are also putting together the talent team that will take us into the future. And obviously dependent on the great talent that we already have within the company. Over the next few months, we'll be working very closely together as a leadership team to put together the plan for the business, the plan for margins, and the plan for the organization. But I expect that will take us till April, when we can get back to you, which again will be, maybe less than 100 days after I actually take over from CP.
So we will know about your big strategy, the overhaul that you could be making in terms of revenue profile, margins, and even for the business, only in April.
Yes.
Even BFSI has come down for you all.
Yeah, so from a quarterly perspective, BFSI has both operational and one-off items. I think in last quarter we had a portion of the business which we stopped towards the second half. So that was there in Q2 last year. So when you compare year on year, that's the impact. Versus last quarter, again, as a part of some of the contracts in Asia that we had in BFSI, we've terminated those or ended those contracts. That's causing a dip in the revenue. But outside that, I think the segment still continues to be tough in terms of discretionary spend, and half of the impact you can attribute to the operational performance on the
Okay,
BFSI.
one word answer. In Q3, revenues decline, according to you?
I think we don't give guidance, Reema, you know that.
Directionally.
But I said, as I had mentioned, second half right now, looking at the numbers, doesn't look to be going towards a positive direction. So
And
you can take it
margins
more
in
as a
H2?
flat view.
Does it get worse before it gets better?
Q3, I can't give you a quantum, as I mentioned, but Q4, we will have a normalized view, in terms of what the baseline looks like, and from there, as we
So
move towards
Q3 could be the bottom in margins. Could be.
All right. Well, that's the word coming in from Tech Mahindra. Let's